We're still test running everything. Just like to preface this whole situation with that.
Information is important, not the production.
Right. We're really running with that idea here. So I am Sara Tramp. I'm a realtor. I'm here with Jim Arbon today.
That's right. With Security National Mortgage, I'm a lender.
Yep. And between the two of us, we try to make dreams come true.
That's right.
So our intention is to create access for our marginalized communities.
Correct.
And when we started brainstorming about who that might be, when it comes to this industry, we realized it's the general population.
Pretty much almost everybody.
Most people don't, even homeowners, even people who've been through the process don't know WTF is going on.
Yep.
So we're just trying to humanize, normalize, bring this whole home buying, getting a loan process down to earth.
Yes.
To help people realize that anyone can do this.
Correct.
Everyone has access to it. Anyone can be a real estate investor. It's just for normal people.
Everybody can do it.
Anyone can do it. So I want to start really quick by just talking a little bit about how I met Jim. So he was on a call with Nick, my boyfriend. So he had us on speaker. And I was rudely like yelling questions through the phone over the top of everyone. And at the end of Jim asked if there were any more questions, if there's anything else. And I was like, where do you stand on Black Lives Matter? Because this was shortly after the George Floyd tragedy. And
I had never been asked that before on a phone call regarding a mortgage. Yeah.
And he proceeds to go, excuse me? Because he did. And I didn't want to completely bombard Nick's refinance conversation with this professional in the industry. And Nick gladly followed up with, where do you stand on the Black Lives Matter movement?
Yes.
And so Jim he just immediately had a great response and proceeded to list multiple organizations that he had personally researched and donated to, he and his wife. So I was like, okay, well, I think we could work together at some point. So that's how I met Jim, and that's kind of how this whole interview.
Never met anybody that way before. So it was very memorable.
Awesome. Yes. So Jim, tell us, what do you do?
Yeah, so my job in all of this is to get people their mortgage. Essentially, like when you buy a car, you can't just, unless you have cash, you can buy a car. But if you don't have that cash, you have to go into a bank and you have to request a loan, and then you try to get approved. And once you're approved, you can buy that car. So I am the guy that is that bank that gets you approved for your home loan. So same thing, car loan, home loan. I'm the guy that gets you that home loan.
Perfect. Yeah. Great explanation. Also, I'd like to add that home loans are asset purchasing, car loans are garbage.
Yes, that's correct. You're not going to get equity in a car loan or a car ever, unless it's an antique.
Yes, then maybe we should add that caveat. So Jim, how long have you been doing loans?
So I've been doing loans. So I actually was in the car industry. I was a loan manager or a finance manager for 14 years. And then I jumped over and, well, funny story. I was getting married. My kids failed. At the exact same time. Instead of going to Italy, we went to Salt Lake, and I went to the hospital and got my dialysis tube put in. That was our honeymoon. So,
oh my God.
And at that point, I did not want to do dialysis at work because you're there good hours. And so I ended up leaving the auto dealership and being the finance manager. And my buddy encouraged me to come over and do mortgages. That was a couple of years ago. And so that was that. And I've loved it so much more. I feel like, I don't know, you're helping somebody buy their future. Whereas when you're doing auto loans, you're helping somebody buy debt. Like we're talking about, that the debt, that asset depreciates, doesn't appreciate or doesn't build equity or value. You just lose money on a car.
And most people end up upside down in loans.
Yeah, most everybody does. Exactly. So whereas houses, I mean, if you have a house, you're going to be sitting pretty in 5 years, 10 years, 20 years. You might be a millionaire in 20, 25 years.
Right.
Because of one house. Essentially, well, it's 5%. So we're talking about like how much does a home build in equity?
Typically appreciate.
So if you have a $300,000 home you buy in 6 years, that home statistically appreciating or gaining value 5% every year. That home will be worth 400,000 in 6 years. That
Right.
same home will be worth $1 million in 25 years. So that's how.
And will be almost paid off.
And we almost paid off at that point. So now you have,
or maybe it will,
an asset that's worth almost $1 million sitting right there. There's a famous quote by Andrew Carnegie, an old time, like 100 years ago, famous billionaire. I mean, his history is shady maybe, but the fact is he knew how to make money. And but he said most millionaires, 90% of millionaires become so because of real estate.
Right.
Yep.
So learning about this systemic institutionalized racism,
Yes.
and really diving into listening to people of color and where the oppression really lies, I just kept hearing this resounding message that home ownership in America is the first, like, most substantial building block of wealth building.
Yes, definitely.
Which was also one of the things that cued this whole project, because of that I was like, oh, that's my industry. That's something I can actually maybe affect change.
We can help people.
Right.
Yep.
So, and that I hadn't necessarily thought it. I mean, I knew it was a great investment plan. It was always my retirement strategy, investment properties, because I grew up in a real estate oriented home. But it made me realize how few people understand it and have access to it, and how important it is.
Exactly.
Really how important it is.
Agreed.
How many properties do you own, Jim?
Right now, 2. We are definitely working on another,
Okay.
But currently 2. We have an Airbnb that we rent out a home, and then the one we're living in. And so that is essentially the extent of what we have. It's been great. I mean, you times that by 2, 3, 4, and that's the road to wealth, and that's the road we're taking.
Absolutely. Has the Airbnb been effective? And
oh yes, yeah. Before COVID, Airbnb was doing really well. We switched it into a long-term rental, and that was our plan. We always said, look, we're going to turn this into an Airbnb, but we can always switch it to long-term if things go south, which ironically ended up going south with COVID. So the mortgage is being paid, and then some still. Airbnb was the mortgage being paid some times 2.
Nice.
But we're still paying the mortgage, nothing out of pocket, and things are going forward.
That's awesome.
Yep.
And so the house is paying for itself.
Exactly.
It's paying all the interest, all the insurance, all the property taxes. You're making a little bit on top of that.
Yep.
And you continue to do that for X amount of years until it's paid off, and then you just own it outright.
That definitely right there. If you own a home, obviously you need to live a home when you retire. So you need a home to live in. But if you have, say, just one other home and you bought it now in 25 years, that home will probably be paid off, maybe 30 years, depending. But as soon as that home is paid off, now you have $1 million, 600,000, 700,000, whatever it is. There's your retirement.
Right.
In that home, in the cash that home has sitting in it in equity.
Oh my gosh. So I really want to get into this. Let's quickly just say, okay, so how does that work? How does someone draw the value out of their home?
When they sell it, or
without selling.
Oh, without selling.
Because they've paid their home off, and they're like, okay, I've now paid it off.
Yes.
I'm 1,000 years old. I want to retire, but I just have this paid off home, so I can live here for free.
Right.
Then what?
There's multiple things that could be done. You could just rent it, and there's your $2,000-$3,000 a month coming in consistently. And if you want to live off that, plus retirement, great. If you want to sell it, you can sell it, and then you have your, obviously you're going to have taxes on that. Depending on what the tax code looks like at that point, you will be paying taxes. How much, who knows? But the remainder is sitting in your bank.
What about can you pull the equity out of that and go, if you want to stay in the home, pull the equity, so basically borrow against it?
Yeah, for sure.
Your home that's paid off.
Yes.
So say it's worth $1 million.
Yes.
How much would you be able to borrow against that?
Well, if you want to do like you're saying, like maybe a cash out refinance, and you can do 80% of what it's worth. So you can do, say it's $1 million home, you can do an $800,000 cash out.
Okay.
You will now have a new mortgage, but then there's got $800,000 you can put into other investments.
Right.
Yeah.
That could then pay their own mortgage.
Yes.
plus
plus your new mortgage.
refinance mortgage.
Exactly. Yeah.
And hopefully some for you on the side.
And that, I think, is the secret a lot of people use for their retirement plan. And because.
But not enough people.
But not enough people. Yeah. And we hope that not everybody does it, because then maybe there won't be enough homes, right? But.
No, I am not worried about that.
There's no worry about that.
There's plenty to go around.
Plenty of homes to go around. But that is exactly, if we're talking about the future, your future wealth and retirement, there's a lot of ways to go about it. You know, you can invest in the stock market, you can do, I don't know, there's a bunch of other things, but this one is, of all the people I know, it seems to be the most successful. My dad invested in some real estate, he co-signed and things didn't work out because he was just going to co-sign, but he ended up with the properties. And they ended up being horrible properties. But because of appreciation, because they eventually were actually worth something, it took a while to get there, but now he has a couple apartment complexes. Yeah, essentially he has real estate that is paying him now, and he owns it outright. And so even though at the beginning it was a horrible setup, in the end, it actually turned out.
That's awesome.
And so if you start it not in a horrible setup, you'll be even better off in the end. So his was a little bit, he got tricked, but anyways.
That have a good team behind you.
Yes, that is why you need a good realtor behind you.
And a great lender
Yeah.
that you can trust, so you know what the hell is going on.
Yes.
Exactly. Every step of the way, you know what you're signing, you know what you're getting into. You've got someone who has your end goal
Yes.
in sight with you, not who's just trying to get a transaction closed, because that's where shit gets weird.
Yep. If someone's looking out for you, things should work out a lot better than if they're looking out for themselves. So, yeah.
Right.
That's the truth.
Okay, so now that we've told everyone why it's so important,
why to get into real estate, why to have that as your retirement plan,
how awesome it is.
Your plan just to buy a house, just to get a house, only a house.
Because you're sick of paying someone else's mortgage and you have nothing to show for it. And you have to keep moving at other people's whims and leisure and coming up with deposits. And, you know, if you can do that, you can probably come up with a down payment for a home.
Probably come up with a down payment.
So let's talk about who can buy a house.
Yeah, who can buy a house? All right, anybody with a social security number or an ITIN number. ITIN numbers are a little bit complicated right now because of COVID, but in the past, ITIN numbers did allow you to buy a home. Most people probably do have a social security number.
What is an ITIN number?
Tax identification number. So if you're not a citizen, but maybe you're a resident here from another country that's either working or studying or whatever, a lot of those scenarios, you will be allowed to buy a home. And that, a lot of people don't know that. Like when they're here studying or they're here living, but they're not a U.S. citizen, odds are you might be able to buy a home. And so those are programs that are available.
Which is amazing.
Yeah.
That everyone should know that.
I know. It should be taught at schools.
It should be. It really should be. That's why we're here, though. We're trying to make up for this education
We are your
deficit.
teachers.
Yep.
Currently.
So I think there is some myth busting that we can do.
Okay.
Like that you have to be this amazing, super put together adult to qualify for a home loan. You guys, I bought my first house when I was still in college. I was 22 years old. Yes, my dad co-signed for me.
Right.
I didn't have a lot of credit, but still I bought my first investment property when I was 22.
Yeah.
If I can do it,
yes,
anyone can do this.
Yeah, there are definitely ways. There are definitely creative ways to do it. There's a couple different benchmarks, like, quickly, credit score, and we'll go over that. Your income versus your debt. So they call that the debt to income ratio.
Right.
So you have to make sure that you're making enough money to afford a mortgage, and whatever that mortgage is, your income has to justify the loan. Right. Because the lenders are looking at it and saying, okay, what is the risk on this loan? And so we have these benchmarks to look at, say, all right, we're good here, we're good here, we're good here. We can get this person a loan.
Okay. So debt to income ratio.
Yes. Credit score, debt to income ratio, work history.
Where do credit scores need to be right now?
Right now, COVID, you need to be a 600 or above.
And that's higher than normal.
It is higher than normal. FHA loans did allow for, I think it's 560, 580, somewhere around there. And that's the mid score. So there's three bureaus, Experian, TransUnion, Equifax.
Yep.
And we always have to take the middle score. So based off your score, that then will let us know which program we can use, whether it's an FHA program, conventional program. There's some USDA programs. We have to be on the rural areas, more country type thing. And then if you're a veteran, there's the VA programs, and those are great.
So awesome.
Yeah.
Yep.
And then I'm trying to think. So yeah, credit score, that's your grade for your ability to pay back your loans. That's all a credit score is.
Right. Okay. So we know what a credit score is.
Mm-hmm.
We have to be around 600 or higher
600
currently.
higher currently.
That fluctuates.
That does, depending on the market. So it's a risk thing. So right now, with everybody potentially losing their jobs because of COVID, they've tightened up what they'll allow people to do a loan on. The banks are trying to protect themselves because, like any business, you want to make sure you're not going to go out of business.
Right.
So if too many people default on their mortgages, it creates a big problem, and they just don't want to deal with that. So yeah, they've tightened up right now. They've tightened up to about 600 and higher. As a credit score. And credit scores range from, I wrote it down, 300 up to 850. So
that number keeps getting higher because I remember 800 used to be the perfect credit score.
But there's not a lot of people in the 800s. That's kind of hard to hit. Mm-hmm. And so the average credit score, 650, 700, somewhere around there. I think the average is just above 700 nationally. But everybody starts low and you work your way up.
Right.
And so I think maybe the next question would be, how do you get credit? What is the way to get credit? Because if you don't have credit, you haven't had a credit card, you don't have an auto loan, these are all, credit is essentially means you're borrowing money from the bank, and the bank is reporting to the credit bureaus how well you're paying them back. And that gets you credit or a credit score, right? And so the best ways that I know of that we found to get your credit to start it is you can co-sign on a car with a parent, then you're getting credit. You can be authorized to use their credit card, or you can start your own credit card, but that can be hard to get a credit card when you don't have credit. So there are first-time credit cards out there, or there's a secured credit card where you go into a bank or credit union and say, hey, look, I want to get a credit card, but I want a secured credit card. I'm going to put $500 or $1,000 into an account. You're going to give me a credit card that I can use up to that money.
Okay.
And and so they're protecting themselves because they don't know what your credit history is or anything.
Right.
And then over 6 months, you have proved yourself. It usually takes about 6 months to kind of be able to get into the harder credit stuff to get, like an actual credit card or things like that. So those are some ways that you can start your credit.
There's no shame in starting where you are. No one's perfect. A lot of probably realtors and lenders don't have perfect credit scores.
Right.
I don't have great credit right now.
Yeah.
Right.
Happens.
Like it just happens. I used to have excellent credit, and I totally had my self-worth, right? My image attached to being this really, model credit citizen.
It's a trophy
it was.
Shelf. Yeah.
And I had my mortgages and all my loans and all this stuff. And then he didn't. And there's nothing to be ashamed of. Everybody makes mistakes. Crazy shit happens.
Stuff happens.
It's 2020.
You might have lost your job, and now you can't pay for stuff. And
Oh
now
my
your credit
God.
gets hurt. There's
ill family. Just this year alone, my health. So
yeah.
No one's judging. Jim's not. I don't know. You're not texting your buddy going, "Oh my gosh, I can't believe this." Dumpster fire that just walked in here with a 580 credit score.
Exactly. No. I've seen so many people. There's such good people that life has happened to. And they have a bad credit score. I think we've all at one point in time in our life have been there. So no, there's no way we can judge anybody that might have a lower credit score.
There's nothing to be ashamed of. And Jim is a really great resource to say, that your credit, maybe you just don't have that much credit, right?
Yeah, if you don't have a history of credit, exactly.
Call a lender and say, hey, I really would like to put a plan together to buy a home at some point in my life.
Yeah.
Right?
Yep.
What am I looking at? How long might this take? I think you mentioned that you have a great credit repair person.
Yeah, definitely. Yep.
Right? So there are resources available. You're not wasting anyone's time by making that phone call, taking that first step. People, we're just all here to cheer you on.
That's our job our job is to help you guys fulfill your dream. And whatever it takes us to do that, we will, and we're happy to do it, because this is why this job is satisfying for you and me. Is it's like it's Christmas morning and we get to watch you open up your gift.
Totally.
And see your reaction and your American dream comes true. You have this house and life is better. It just feels better when you're in that position.
It does.
And we want everybody to feel that. And so a note on credit too. So real quick on just some things to consider. So on your credit, if you feel like it's lower than it should be, there's a couple things that I tell people immediately you can do. And then if we need to go through the credit repair agency that I love, then they will dig in a little deeper. And sometimes we have to work with the bureaus to fix some stuff in your history, take it off your credit report, that raises your credit. But the number one thing that I've noticed is credit cards. If you're using more than 30% of your credit card, and the bureaus, the lenders, the creditors are going to report to the bureaus once a month. And if your use of that, say you have $1,000 credit limit, you've used $700 of it, and that gets reported to the credit bureau. Well, that's not going to look so good because what they want to see is you using 30% or less of that credit. So your $1,000 you have available, don't use more than $300. If you have used more than $300, you want to pay that down to that 30% and don't go any higher than 30%.
When you're applying for any loan.
Yeah, or even just to get yourself that credit, because it might take a month or two or three for that credit to come back up or to come up. And so you just don't want to go over 30%. If you can help it, sometimes you have to, but that is the kind of the magic number on credit cards. And that's the number one thing that so what I've been able to do is I can look at your credit and I can do the what if calculator and I can say, all right, if this person pays down their credit card this much and this credit card down this much, what is that going to raise their credit score to? And oh my gosh, all that you have to do is pay down this one credit card, $700, and their credit score jumps up by 60 points.
So Credit Karma has that function.
Okay, yes.
Right, an estimate. How accurate would you say Credit Karma's?
So Credit Karma, okay, so with credit scores, this is the weird part about credit scores. They're different.
Right.
If you do an auto loan or a mortgage or whatever, there's a different emphasis and they'll show a different score. So Credit Karma, what they show your credit score to be, can at least give you a good idea, but don't be surprised when the lender pulls up your credit and it's actually a different number than what Credit Karma shows. And it's oftentimes a little bit lower than what Credit Karma shows. But it at least gives you an idea as to know where you're at.
It's a good tool, it's kind of like looking at homes on Zillow.
Yeah.
It can give you an idea, but it's probably not super accurate with where the market really is.
Exactly. That's a good way to put it. Yep.
Okay, so we've got credit, we've got some credit tips.
Yes.
Let's talk about income qualification.
Yes.
Because I know that can get a little interesting.
Yep.
But also you can be pretty creative.
Yeah.
With
so
qualifying.
What lenders are looking for is reliable and consistent income.
Okay.
And so in order to satisfy that guideline, we have to look at 2 years of history.
Okay.
So has somebody been working for 2 years? Because a mortgage is kind of big debt.
Right.
It's a big liability. And so the banks need to see that there is some history. It reduces risk by showing, okay, this person's worked for 2 years.
Does it have to be at the same job?
No,
okay.
It does not. On an FHA loan, you can have, as long as you can show that you've been working for 2 years, and there can be a gap or two, but it just can't be big gaps, like 6 months or something like that.
Working anywhere? Does it have to be within the same industry?
Not necessarily. Not necessarily. They just need to know that you have been working.
2 years work history.
2 years work. That's a gold standard. 2 years work history.
And then isn't there something students?
So that your time as a student would qualify as 2 years work history if you're about ready to graduate, you're getting contracted to work at X company.
Okay.
But you don't have 2 years of work history. Well, that student history qualifies you if you have a contract to move into the job.
That's huge.
Yeah.
This is huge.
Yeah, you don't have to be working. You don't even have to be working at that moment to get a home. You just need a contract that you're going to be working in a month or two.
Like this is amazing.
Yeah.
Everybody should know this. Everybody should know all of this.
Spread the word.
Spread the word. That's really cool.
Yeah.
So there is, again, You don't have to have worked at the same place making, hundreds of thousands of dollars for the last 2 years to get a home loan.
So this is the way you need to do your math.
Okay.
Let's do a simple math.
I was going to say, how much is it going to actually cost?
Yes. Okay. So for the numbers that you need to figure out, can I afford a mortgage? So, okay, say you make $3,000 a month.
Okay.
That's before taxes.
Right.
Debt to income ratio, that's another thing we have to look at. So how much money do you make a month? What is your monthly debt obligations? Is that monthly debt obligation, all those debt obligations added up equal to 50%, depending on the program, it can be a little higher, a little bit lower, but let's just call it 50% compared to what your income is. So say you make you make $3,000. No, let's say $4,500. But that's just easier because you can't get $4,500, that could be you and somebody else, a co-signer. So that's your combined income, and your combined debts are half that. And that does include the mortgage. So you have to include your mortgage into that because that is going to be a debt you're going to take on.
What other debts would be considered?
So you have student loans.
Okay.
And student loans are tricky because there's a lot of different ways we have to calculate that student loan debt obligation.
Okay.
Usually what we have to do is 1% of whatever is owed. So say you owe $50,000 or $20,000. We have to put 1% per month as your obligation, unless you're in a income-based repayment plan. And oftentimes those you'll get proof from them that it's an income-based repayment plan. It'll show what your payments are. And sometimes those are zero. So if they do show zero, we can just blank out your debts on that. But student loans, car loans, credit card loans, alimony payments, child support payments. I think that's the basic big ones.
What about cell phone bill?
No. Utility, cell phone bill, babysitting bill, dog sitting bill, whatever, like
those are not
gardener bill
being considered on your monthly.
They don't show up on your credit report.
Obligations.
Exactly.
Okay. So that's important to know, I think.
Yep. And so you just have to add up all those debts. What is my monthly? It's very important. It's the monthly. So on your credit card, if you look at your credit card statement, it says your minimum payment. That's what you have to use for that monthly debt.
Yeah.
So add those up, auto payment, alimony, child support, student loan, credit card, all that. Boom, there's your monthly debt. What is your income before taxes? And then
before taxes,
not after, before taxes. You take your debt, divide it by your income. There's your debt to income ratio, and see if it's right around 50%. But you do have to add in a mortgage. So that's the tricky part. You got to figure out what would my mortgage payment, and there's all kinds of, you can go to bankrate.com. That's a good place just to figure out what would the monthly payment be on it.
For a mortgage calculator.
Or just a rough mortgage calculator. Exactly.
There's so many resources for those. If you have an idea of what the current interest rate is going to be, or if you're working with a lender, they're going to tell you around where you are going to qualify at.
Exactly.
And you can just plug that right in and know what you're putting down. And those are great tools.
The internet's an amazing thing right now. As everything.
So that stuff, I think it's really great that we can resource people to sort of figure that out on their own. Say it's a Sara who is like, this is too much information. That sounds hard.
Right.
Could I just call you and say, hey, Jim, or hey, Sara, I think I might want to buy a house. I can put you in touch with lenders. You can call Jim. Hey, Jim, I don't really want to do all this math by myself.
Exactly.
I have no idea.
This is a lot of information. So
I'm hoping I qualify. Can you just run some numbers for me? Is that something?
Oh, totally. Like everybody, we're all so busy. It's like, I don't even want to think about this, but I want to know. And so definitely, like if someone just calls me on the phone, I'll give them a really good, basic, rough estimate just based off numbers and everything on the phone. And then if somebody wants to proceed, we just do a loan application. We send it to them on their phone. You simply just fill it out on the phone. It's going to want to know what your income is. Things we have to have is your name, address, social security, date of birth, and stuff like that. And it'll go through all that. It's real simple. It takes 5-ish minutes, and then it comes right over to me. And then I can run your credit, and that will really tell me the exact numbers. But over the phone, 5-10 minutes, I can give anybody kind of a rough, here's your numbers.
That's awesome.
Yep,
So that's worth a phone call.
it is. Oh, yeah.
And it's not a bother to Jim.
No.
I mean, I shouldn't speak for you, but
No, it's something that everybody wants to buy a home, but they don't know how to get there. And so knowledge is power. And if you make that phone call, then you're like, okay, now I kind of know where I need to go with this. And it gives you a plan. It gives you a roadmap.
and Jim can probably resource you with some tools.
Yes,
If it's a no, he can tell you how to make it into a yes.
exactly.
Or it's a lot of people are qualifying for way more than they ever anticipated
Yes.
right now because interest rates are so low.
Yeah.
It's so common that people don't, and they don't know where to start.
And it's overwhelming. So you don't start anywhere because you just don't want to deal with it.
Yeah. So it's one phone call to a lender.
Yes. So how much does it actually cost? So there's a lot of ways to go about it. Depending on the program, depending on your situation, there's always a down payment. You do have to put a down payment down. Not always do you have to put that down payment down. Sometimes there's programs that will put that down payment down for you.
Right.
But if you do have the money, the down payment's going to be anywhere from 3% to 5%. If you're a first-time home buyer and you have the credit score that would allow for a conventional loan, which is generally about 700 and above, sometimes a little bit lower, but let's just say 700 for now. And if you have 3% to put down, like I think it was $300,000 home, that'd be like $9,000. That would be the initial down. Then there's closing costs. We'll get into that. But the down payment minimum would be 3%. If you didn't have that $9,000, or if it's 5%, that would be, I think it was $15,000. But if you're doing a first-time home and your credit score is a little bit lower, an FHA loan requires 3.5%.
Right.
And so in order for you to come up with that money, you either have to come up with it or there are down payment assistance programs. And so the Utah Housing Corporation has a wonderful one that we use all the time. And that one, they pay for your down payment and oftentimes pay for most, if not all, your closing costs. And so it just depends. If you're a 620 to a 660, that's called the score loan. And that will cover 4% of the loan amount. And that will cover your down payment for sure, and a little bit of your closing costs.
Oh my gosh.
If you're 660 and above, it'll cover 6%, which normally covers almost all the closing costs and the down payment.
This is amazing.
Yeah.
This is, and these loan programs sort of come and go and evolve and change.
They do.
And so FHA is always a thing.
Yes.
VA is always a thing. VA.
Yes.
Is really interesting. VA is awesome.
VA interest rates are amazing. If you are a veteran and you weren't trying to buy a home, the VA loan.
Do it. Yeah. VA loans are awesome.
You get the best interest rate.
They're amazing. So FHA and VA are constant, but these programs like the down payment program, they sort of will fluctuate.
They can fluctuate.
This is why it's really important to have a great lender who is staying up to date on things and who gives a shit about you and your goals, because that it probably doesn't necessarily benefit you.
No, the grant money and stuff like that. No, it doesn't. My goal is to get you the loan. However we get there, it doesn't matter. Like there's no benefit for me except giving you a loan.
But working with someone like Jim who cares about the service to the client and not about just closing the transaction.
Yeah.
And making sure that your needs are being met and that any assistance that is available to you, he's going to know about and going to offer to you. And so that's
I'm looking at it every day and I know what's available. And therefore you don't have to look at it every day and try to figure out what is available.
Right. You're essentially not responsible to know all of this. And if you do hear about something awesome, cool, call a lender and say, hey, what's going on with this? Is this, legit, or
exactly.
Is this something you guys can offer? But it's this information right here is why it's so important to have a rock star team.
Yeah.
I think, right?
Oh yeah. Realtor to buy the right kind of house, not get ripped off. There's all kinds of stuff that you might not know that you're going to find out later and you wish you had a realtor. And then same with the lender. Like you need to have somebody that knows the programs. And we've had several people come over like, oh yeah, I couldn't get a loan. They told me I couldn't get a loan, but let's see, what can you do for me? I'm like, you can get a loan. You can get a down payment assistant loan and we get them in the house.
Why are people right now saying that they can't, like COVID has stopped refinancing? are people
Hasn't
still
stopped
able to
refinancing. It's just raised the bar it's raised the credit score that you have to do that.
Okay.
And then there are self-employed situations where
Right.
you have to prove currently what you're making versus just having 18 and 19 tax returns. Now you have to show what are you doing now. So it's become a little more challenging, but it's there. And in fact, refinancing is still ticking along like it's never like these are record numbers this year for refinancing. I think every 4 loans out there, like 2 to 3 are refinancing.
Oh my God.
Yeah.
Yeah. Interest rates are so low.
Yeah. I mean, yeah.
Which then boosts buying power.
Yes.
Buyers
buy a bigger home and afford more. Yeah. It's amazing.
It is amazing. So down payment is going to be anywhere from 3
to
5% of the purchase price. Yep. So like Jim said, on like a $300,000 home, that would be $9,000 at 3%. That would be $15,000 at 5%. To kind of just give you some examples. And then there are closing costs. You can negotiate some of those. There are different ways that those get paid. Yes. Sometimes it's on you, but this is all a conversation, and every situation is unique, I think.
Exactly.
And so between, like, we just negotiated in this crazy seller's market. I've got a buyer and we got $5,000 in closing costs for her.
Oh wow, in this environment, that is really good.
Yeah, I heard it's not happening.
Yeah, it's not happening very often.
But we got it, and we were really excited. And that took, that's $5,000 in cash that she doesn't have to show up with at closing now.
Exactly.
Those things can happen. I know there's horror stories right now going around about buying a home in the Salt Lake market. Well, Utah, I think nationwide.
Nationwide, especially Utah for sure, but nationwide definitely. Like
Utah's off the hook, but you have not been priced out of the market.
No, you have not.
There's still stuff available in your price range.
Yep.
Most likely, as long as you're realistic.
Yep. And if there was ever a time to buy, like these rates probably won't stick around. I mean, I think they're going to be around for another year-ish, maybe 1.5, 2 years, but who knows? Historically speaking, these interest rates are as low as they have ever been.
Right. Ever.
And they'll probably bounce up, and what you could have bought now, you won't be able to buy in 2 years.
No. And this is real. And I think this might be another conversation, but I found it really interesting to look up amortization calculators and evaluate the difference between buying a home at 3, because people are worried about buying in a escalated market.
Yeah.
And like, am I going to pay too much? Am I going to be upside down on my home loan? It's a little bit different how mortgages work than cars, right? If you can weather the storm, you're fine. It will always go up.
Yep.
But when I looked at the difference between buying a home at, I think it was like $500,000 at 5% versus 3%. It's incredible what you're actually saving at 3%, just that 2% in interest rate over the life of your loan. So these low interest rates are making up for the prices. That's why prices are so high, because people have super buying powers right now because rates are so low. Just to drive that point home.
Now is the time.
Everyone should be borrowing money right now.
Yes. Yeah, everybody should be, because you won't be regretting it.
Borrow money, leverage your equity.
Now, quick note on what Sarah said as far as, okay, so like a car, you buy it and you lose value, and it just, until it becomes an antique, then maybe it comes up. On a house, it constantly goes up in value. So if you buy it here, like we were talking about at the beginning, it's going to be up here in a couple of years. There are moments in history, like 07, 08, the Great Recession. That actually was the only time the house values did drop. Other recessions, home values actually didn't drop. Home values were either level or on a gradual up. But home values only during the Great Recession dropped.
That's interesting.
Yeah. So a lot of times people think, all right, well, I'm going to wait for another recession, and then I'm going to be able to buy a home for a lot cheaper. That's historically not accurate. You will, unless we hit a huge Great Recession like we did in 07, 08, then you're right. But historically speaking.
But interest rates will probably go up as prices come down, right? And even if home prices come down, here's the thing. That doesn't mean that you've lost money.
Right.
If your neighbors sell, if your home value does, like in 08, if your value comes down, as long as you're paying your mortgage, here, simple supply and demand. I say this all the time. Our population is growing, our land mass is not.
Right.
Now, the amount of houses that are being built are, but there's only
we're way
there's only
behind
so
on
much land.
inventory. There's not enough
It's
homes.
so scarce.
Yeah.
And so it will always, even if it does a little bit up down, it will always come back up historically. And it's not, this is not like a 10+ year plan. I mean, over the course of 5 years, even like you said, or 6 years,
Yeah,
it should statistically appreciate by about $100,000.
by $300,000 home, exactly.
So
And
on a $300,000 home, which is a $9,000 down payment, that's a pretty good return.
It's a pretty dang good return. That's a pretty dang good return.
It's awesome. It's so awesome.
Yeah.
Okay, so we touched a little bit on what lending and refinancing looks like in COVID times.
Yes.
I know that's been a really hot topic, but people are still getting loans. People are still refinancing. This
Definitely.
is not, and the myth about, this 2-year perfect work history, that it has to be at the same place. We busted that.
Yes.
That's not the case, because I think that's something people are panicking.
Yeah.
Because they're getting laid off or they're having to pivot
exactly
due to COVID
to another job, and then they're fine.
And they're okay. And they can still get a home loan.
Exactly.
And they can still refinance.
Yep.
Okay. To be clear,
yeah.
everything, deep breaths, everyone's still okay.
And just, if you're not sure, like you were saying earlier, call. Just call. It's easy as that.
Yep. You can send me a text message and I can send your information to Jim if you don't want to be the one to reach out, and he will reach out to you.
Exactly.
And I can tell you from experience, he's prompt and good and easy and friendly. I'm
just staring at my phone as I'm working all day, waiting for that text, and I get all of them. I have 4 hands. You don't see them, but I'm just like, I'm multitasking.
The invisible
like
hand
crazy.
hit the pop.
Yeah, I didn't even hit that. He hit that.
So let's talk about what that first conversation might look like.
Okay.
So, because I know that's something when I'm like, yes, I often am the first point of contact.
Yeah.
And they'll say, okay, and I'm like, all right, let's get you pre-qualified and see what, before we start shopping, see what you're able to purchase. And it makes them really nervous. It makes people nervous to call a lender, and they don't know what to say, and they don't know, they feel like they're supposed to speak this language that they've never been taught, or like have this really great plan or something. And that's not the case.
No, it's simple. All you have to do is call, and we'll lead you through that conversation. We'll ask you the questions that need to have, that we need to know.
It's as simple as like, hey, Jim, my name's Sara.
Yeah.
I don't know anything about getting a home loan.
I've had several calls like that. I don't know anything about home loan. Well, what do I need to do? And then I'll just, all right, great. You came to the right place. Let's go through this conversation. I'm going to ask you a few questions. You answer them the best you can. Let me know what you're making. And I go through the questions.
What will the questions be?
Yeah. How much do you make a month before taxes?
Okay.
What do you think your credit score is? When's the last time you saw your credit score?
Some ballpark idea.
What are your monthly debts? Like we talked about, what do you pay monthly, and what's that monthly payment? Do you have, and go in more detail, like, maybe I'll ask, do you have child support you have to pay? Do you get alimony you have to pay, or do you get, and then I'm going to try to figure out what your income is, what your debt is, what your credit score is, and really with those. And then the other thing, do you have a down payment? How much money do you have saved up? Okay, great. That's enough to do it. Or, okay, well, let's look into your some down payment assistance programs.
And that's if you're super prepared and you don't have to have all that information.
No, you don't.
To call Jim. If you don't remember all this and you don't want to, if you're not taking notes and you're just like, hey, wonder what I need to call Jim. He'll give you a list of what answers or like what questions that he has, what answers he needs, and get started that way.
Exactly.
I know everyone operates a little bit differently.
Yeah.
Some people want to.
What do I need to know? I'll go find it and I'll call you back. Perfect.
Yep. Exactly. Yeah. I'm that. I don't want to do. I'm going to call someone. I'm going to have them direct me. I'm going to have them send me an email. Probably. What do I need?
Yes.
And then I'll at some point get that back to them. So you can. This can work however you want it to work. There's no, predetermined format of and there's no expectations of borrowers.
And if you think you're a bad situation, you don't really want to talk about it, believe me, We've talked.
I'm
You're not going to
probably
be
in
the
a
worst
worse
situation. Yeah, the bar has been set very, very low. And so you're fine. Don't even worry about it. Don't even be self-conscious about it.
No,
Yeah.
that is something, oh my gosh, there's so much credit and financial shame. And it's so
Don't even look.
dumb.
It is.
I hate it. It's ugly and it's real, but it frustrates me.
Yep.
Okay, so that's what that first conversation is going to look however it needs to look.
Yeah.
It can be literally as easy as, hey, I don't know what the hell I'm doing. Can you hold my hand through this?
Yeah.
I like, you know.
What's a credit score? I'll go over it. And yeah, it's like, don't be afraid.
I feel like a big part of both of our industries is education.
Educating. Mm-hmm.
And I like doing that. I think Jim likes doing that.
Yeah.
So and you want, if this is new to you, or even if it's not new to you and you just don't remember it and you want someone to hold you want someone who likes to educate you. Most
of the people I talk to are people that don't quite know how it all works and are not getting a loan right then and there.
Yep.
They're getting the questions answered and they're going, okay, yeah, this is a 6-month to a year plan or a 2-year plan or
5-year plan
before I can even get a home. But at least now they know and they start. So that, like, a lot of the people I talk to, that is the situation. And then a year later, they come back and they're ready.
So, and you've just got to start somewhere. And then there's other people that are like, oh my gosh, I had this gal. She one day was like, do you think, I don't remember what it was, $1,800 is too much to pay for rent? And I was like,
yes.
Well, I would rather be paying a mortgage with that amount of money. Yep. She hadn't even considered, her husband made a ton of money. They were wonderful. And so I was like, why don't you just look into it? And she's like, oh, okay. 2 days later, she comes back and she's like, yeah, oh my gosh, we qualify. Let's go shopping. It was so funny. They just hadn't even considered it.
I had one the other day, same thing. Like, can you look at my numbers? I just don't think I can get a mortgage. I looked at their numbers. I'm like, you can get a really big home if you want to. Yeah, I was like, let's do that. Yeah, and she was surprised, and I was like, you can do it. Congrats.
Yeah. I feel like we've covered so much.
Yeah. And
I think in a really good way. Is there any beat we've missed?
I think those are the basics. Like, I think today was good to cover, like, this is essentially, we've gone into great detail into the initial phone call that I usually get.
Right.
Can I get a mortgage? And then the questions I ask them, what is your credit score? What's your income? What are your debts? Do you have money down?
Right.
And that's pretty much what we just discussed in in a lot of detail. And I think that is the first place that people go to. So I think we've covered pretty much everything that we need to on this one.
Okay. Day one. Conversation 1. You're welcome. Much more to come. Thank you so much. What is your biggest takeaway from our conversation?
People can buy a home. And if they can't right now, you can in the future. You just need to know the road.
People, humans, any human, anyone can qualify.
Anyone can qualify.
Eventually, at some point. Yep. Okay. Thank you so much, Jim.
Yeah, thank you.
It was great conversation, super good information. And we will be doing this again soon, I'm sure.
Okay. And thanks you guys for watching.
Thank you. Hope we didn't bore you to death.